Hello everyone, good afternoon and a very warm welcome to our webinar today all about pension re-enrolment in Sage 50 Payroll. My name's Duncan, I'm your host and presenter, and I am joined by my colleague Alice, who's standing by in the background ready and waiting for any of your questions. Let's now take a look at what we're going to cover in the webinar. So we're going to start things off with a brief introduction to your re-enrolment duties, explaining when you need to do this and what steps are involved. I'm then going to give you a demonstration of re-enrolment using the pensions module, which will automate many of the processes, and it will assess your eligible staff and re-enroll them as part of the pension assessment option. Once we've been through the demo, we'll briefly touch on re-declaration, explaining what's involved with that, and where to find further information and guidance with how to do that. And we'll finish things off with a little quiz. So 4 multiple choice questions to test your newfound knowledge on today's topic. And then I'll run through some of the further support available, and we'll try and stick around at the end just to give you time to read through questions, to ask any final questions, and to download any of the handouts. So let's get things started by running through what re-enrolment actually is. Now, this is one of your ongoing employer duties, but it's not a duty you complete each time you run your payroll like most of them. This is a duty you can complete every 3 years, whereby you will need to assess if you have any employees who previously opted out or left your qualifying pension scheme, who then need to go back into that pension scheme. So it's known as cyclical re-enrolment because it's on a cycle of every 3 years. Now, the actual duties will vary depending on whether or not you have employees who fall into a category that needs to be re-enrolled, but it will always involve a re-declaration of compliance with the pensions regulator, and there are certain timescales that you need to do that within. Now, you can read the pensions regulator's guidance on their website, so we have included a handy link to that on your handout. But just to run through the timeline and when your re-enrolment happens. So it's all based around a 3rd anniversary of either your duties start date, if you're a recent employer, or your previous re-enrolment date if you've done re-enrolment before. Now, the re-enrolment window, so the period of time that you can choose a re-enrolment date in, starts 3 months before the 3rd anniversary of the duty start date or previous re-enrolment date, and it ends 3 months after that anniversary. So you can choose any date that suits you within that 6-month window as your re-enrolment date when you put people back into the pension scheme. Now, you will need to redeclare your compliance, and the deadline to do that is fixed at 5 months after the 3rd anniversary date. So it doesn't matter which re-enrolment date you actually chose this time round, the deadline for redeclaration is 5 months after the 3rd anniversary. So if you did go for the latest possible re-enrolment date, you've only then technically got a further 2 months to do your redeclaration of compliance. So let's take a look at what's involved in re-enrolment itself. So we've broken this down into 4 steps. So number 1 is that you choose your re-enrolment date, so you have the flexibility of that 6-month window. When you reach that date, you need to assess and re-enroll employees who are eligible and who previously opted out or left the pension scheme. And to be eligible, they'd be aged between 22 and state pension age, and they'll be earning above the earnings trigger, which is the equivalent of £10,000 per year. Step 3 is to write to the employees that you've re-enrolled, explaining that they've gone back into the pension scheme. And then step 4 is to complete your redeclaration of compliance. And we have a handy guide outlining these steps with a bit more detail available in our help center, and you can find that following the link on the slide. Now, if you don't have our pensions module, you can of course complete these steps manually. So to explain what's involved in that, you would need to manually assess your employees to work out which of them are eligible to be enrolled and who had previously opted out or left. You would then need to assign the pension scheme to those eligible employees who are not currently within one. And to write to your employees, you could download the letter templates available from the pension regulator's website. I've included a link to those on the slide, and you could then send those out to the employees that you re-enroll. Now, what I want to do briefly is just show you where you would complete those steps if you're doing it manually. But much of this is automated if you use our pensions module. So that's what we'll show you in the main demo. But if you are doing it manually, if I just bring these slides down, first of all, once you've established your re-enrollment date, you would need to assess your employees. So you'd look at their age and wage. And if you need a reminder of the earnings trigger or the eligibility ages, you can actually find them if you go to company and then legislation in your program. And you'll see there's an automatic enrollment tab, which confirms the earnings trigger for each of the different pay frequencies. So it's £833 monthly, for example, or £192 weekly. It's also got the eligibility age, so it's 22 to state pension age. And if they have previously left or opted out of a qualifying scheme, they go back in from your re-enrollment date. Now, there is actually a few reports that might help you to assess your employees manually. So if I just select my employees and go into this main reports option above the employee list, I've actually added it to my favorites. So it's the pensions automatic enrollment report, but it can be found within the company folder here on the left-hand side. So you can see these ones that start with pensions can be used to help you with manual assessments. And if I run this automatic enrollment report, that will indicate to me which of my employees are eligible, but not currently in a pension scheme. So it's highlighting 3 employees on this report. So those are the ones potentially that will need to re-enroll. To manually assign the scheme, you would do it via the employee record. So on the pensions tab, you'll find there's no pension scheme set currently because they previously opted out. You can click manage schemes and you can add that back on. And you can set your join scheme date and active membership date. So you choose the scheme they're going into and then set the relevant percentages, etc. So that's how you would do it manually. And once they're in that pension scheme, you can write to them using the letter templates and send the details over to your pension provider. But we're always looking for an easier life. So what I'm going to show you next is how you can do all of this by simply running a pension assessment, which is one of the options that you get with the pensions module. So first thing we're going to take a look at are the re-enrollment settings. You can check these at any time just to see when your re-enrollment date might be coming up. Once we've been through those settings, we'll then have a look at when you would run the assessment, and we'll give you a demo of assessing our employees, putting them back into a pension scheme, and then an overview of what the next steps might be. So if I just jump back to the demo again, to find your pensions module settings, if you start from your company tasks, you'll find the link here on the left-hand side, pensions module settings. And in this particular example, my duty start date was the 1st of July 2021. That's when I took on my first member of staff, which means that my re-enrollment is coming up as we've just passed the 1st of July 2024. And to get into the re-enrollment settings, you've got this option here, Manage Cyclical Re-enrollment Settings. And once you click on that, you'll see it shows you the suggested re-enrollment date, and that will default to the 3rd anniversary, the window to complete re-enrollment, and then there's some sections all around exclusions. So let's start with the re-enrollment date. Now for this particular demo, I haven't yet ran my June payroll. So obviously I'm a little bit late doing that, but this is just kind of for the demo today. So the June pay date would be in the same pay reference period as this 1st of July re-enrollment date. So I could stick with this date. I could delay it for up to 3 months. So I can go as far forward as the 30th of September. But if I try to put it back, or bring it forward, I don't know what the right expression there is, but if I try to put it in the past, say to the 1st of June, we will see a warning that this is in a historical period. So the date entered is a historical date, which means we won't be able to run a pension assessment to complete the re-enrollment. So we'll talk more about pay reference periods in a moment, but for this demo, I am going to stick to the 1st of July, the 3rd anniversary of my duties start date. The other key setting is deciding whether or not you want to put employees that opted out or ceased membership of a pension scheme in the last 12 months back into the pension scheme on your re-enrolment date. Because under the legislation, you don't have to re-enroll employees that opted out or left less than 12 months before the re-enrolment date, but you can choose to re-enroll them if you want to. So the default setting is to re-enrollment by including them in the assessment. But if I don't want to re-enroll employees that recently opted out within the last 12 months, I have the option of excluding them from the assessment. So this is here within the re-enrolment settings. Now, there are other reasons why employees might be excluded from auto-enrollment, and you can set individual exclusion reasons if required by using this option at the bottom of the settings to manage employee exclusions. Now, if, for example, you had an employee that previously opted out, but they are now working their notice period, so they've given you notice that they're leaving, that is one of the reasons that they can be excluded from auto-enrollment. So what we could do for that particular employee is we could choose an exclusion reason. For example, they are working their notice period. Or if any of the other exclusion reasons apply to employees that previously opted out or left, you can see them listed here, you can set those on an individual basis against those employees. And that will avoid them being re-enrolled when your re-enrollment date comes up. Now, I'm not going to set individual exclusions. I'm just going to do the recent opt-outs and cessations, so within the last 12 months. And then to save these settings, just go ahead and click Save. So that's where you can access the settings at any time. But you'll see when you come to do your pension assessment in your re-enrolment period, you do have a final chance of adjusting those settings as well. So just recapping the settings. So you find them in your pensions module settings. First thing to do is to check you're happy with the re-enrolment date and make sure that it's not in a historical period. So check, and if required, amend your cyclical re-enrolment date. And then you make the choice of whether you want to re-enroll employees who opted out or left in the 12 months leading up to your re-enrolment date. So in my demo, I set that to exclude. And then of course, you've got the individual exclusion reasons if you need to use them. So next thing you'll need to do is to run an assessment, and the pension assessment option with the pensions module will do this for you. Employees must be assessed in the same tax period as your re-enrolment date. So the tax periods for the pensions module align to, pay reference periods align to tax periods. So if you are paying monthly, for example, you need to look at the pay date that falls in the tax month that your re-enrolment date is in. So if the re-enrolment happens to be after the assessment date, the first contributions will only be deducted from the next pay reference period, and those first contributions will include a small pro rata amount relating to the previous period. And if this sounds familiar to some of you, it was quite common for those of you that had staging dates prior to 2017 when these duties first kicked in. So quick example, which I'll bring to life with the demo, is that if you have employees paid monthly on the last day of the month, and you choose a re-enrolment date of the 1st of July, you would need to assess them for re-enrolment in tax month 3, which starts on the 6th of June and ends on the 5th of July. Now, because our pay date is the last day of the month, that means the assessment will take place on our 30th of June pay date, which will then re-enroll the eligible job holders who previously opted out or left the pension scheme. However, the first pension contributions would be taken from the next pay date, the 31st of July, with that first contribution including a small pro rata amount for the 5 days of the previous pay reference period. And in this particular scenario, the specific scenario, it actually gives your employees a chance to opt out once you've sent their details to the pension provider, potentially before the first contributions are actually taken. So I'm going to run through this scenario in the demo. I'm just going to return to my payroll tasks. I've set my process date to the 30th of June. And I've already selected my employees and I've entered the payments. Before I go into the assessment, let me just show you 3 employees that have previously opted out. So currently in their employee record, there's no pension scheme set. First couple opted out back in 2021. And I have a third employee who opted out more recently on the 6th of May, 2024. So what I'm expecting to happen is that those first 2 will be re-enrolled, but this last one, because I've excluded the recent opt-outs, will not. So I'll just go ahead and select everyone. I'm going to go into the pension assessment option. And because it's detected that we're now at the re-enrollment date, we're in that tax period, it gives us one last chance to review our settings. So that's the date chosen, the window, and the fact that we've excluded. And if you want to change any of those settings, you can jump into the settings from this button here, and you can make necessary changes before you go into the assessment. Now, I'm happy with the current settings, so I'm going to tick the box and then click proceed. It'll then prompt you to take a backup, which I strongly recommend before any pension assessment, but particularly the one when you're re-enrolling. We call this re-enrollment. It'll then open up the pension assessment for you. And we're looking for any flags to the left of the employee names. So I'm seeing 2 flags, and both of them, if I hover over, are because we have eligible job holders being re-enrolled this period. Now, looking at it in a bit more detail, hovering over the status shows you why they were eligible. So they're earning enough, they're the right age. The enrolment date is set to the re-enrolment date, the 1st of July, which in this example is after the current pay date. And for that reason, we've got a pension scheme assigned, and it's calculated the pro rata portion, and it's saving that until the next period. So currently there's nothing being deducted for employee 1 or employee 3. But when we do our next assessment, that's when we'll see the slightly bigger contribution to take account for those first 5 days. Now, of course, I also have an employee who still has a status of opted out. So opt-out notice was received in May, less than 12 months before the re-enrolment date. So for that reason, they've not been included in this round of re-enrolment. Now, as always, you can save details of the pension assessment by emailing, printing, or exporting as a CSV. And you can use the filters if you want to specifically see changes this period. So I know that both of these changes were the employees being re-enrolled. Once you're done, you can close out of this screen. It'll then advise you of your next steps. So you'll need to redeclare your compliance with the pensions regulator. You must send the enrolment files to your pension provider the way that you usually do. So that might be using Send Pension Data if you've set up Pensions Data Exchange. And you need to write to your employees to let them know they've been re-enrolled and to inform them of their next steps. And you can do the letter from the Send Pension Correspondence option. So closing out of this screen, that returns me back to the employee list. And looking at those same 3 employees, I'll go into their employee record. You can see first ones have been put back into the scheme with effect from the re-enrolment date. So that's been assigned again. It's set their re-enrolment date. It's telling us that they now have the option to opt out. They would do via the pension provider. Exactly the same for the second employee. But for that last one, they remain opted out because they only went in and out of the scheme very recently. So when it comes to the next pay date, actually before that, I'll do the pension correspondence. So we would send the pension data, enrolment files, etc., contributions for the existing members to the provider. Sending pension correspondence is how you generate the letters. So you'll see here I've got 2 letters for the employees being re-enrolled. Just to show you the preview, I'll click on the letter name. So it's based on the regulator's templates, tells them that they're being put back into the scheme with effect from this date. Got some information about tax relief and some common questions. So in order to produce those letters, you would select them in the pension correspondence option, record the date you sent them to the employees. So you should send these after you've sent the information to the pension provider. And then you can click the send option. In my case, I'd be printing them out. And it will also save a copy of that letter in the employee's record. So that's now in my historical records. So I can see 2 re-enrolment letters were sent out on today's date. So those are the duties complete within Sage 50 Payroll. There is still the re-enrolment, the redeclaration. But when we come on to the next pay date, sorry, I should really update the records first. You would send your FPS in the usual way. When I come on to my next pay date, which will be 31st of July, I do my pension assessment for that period. This is when we're going to see the first contributions. So for employee 1 and 3, we've now got pension contributions being deducted. And if you look at employee 3 specifically, they've got the same qualifying earnings as employee 2. They're in exactly the same scheme, but their contribution is slightly higher this month because of that pro rata amount. And something similar has happened for employee 1. Employee 10 remains opted out. And if you've had an opt-out notification from your provider, the employees that were re-enrolled have opted out by this point, you can process an opt-out request. And in this particular case, it means that there'd be nothing to refund because this would have been the first time the contribution was being taken. So that's how it all works. Just to recap those steps once again. So that was the scenario that we just ran through. When you go into the pension assessment, that's when you're going to be told that you've reached your re-enrolment date and you've got that last chance to make any changes to your settings. If you want to delay it to later on in the window, you can do. Once you're in the pension assessment, you're looking for any changes this period. And if you hover over the flag, it'll tell you if it's because someone has been cyclically re-enrolled. And then when you close out of the assessment, it'll outline your next steps. And then you can run send pension correspondence. Once you've updated the records and sent the pension data to your provider in order to generate those re-enrolment letters. So the other part of it is your redeclaration of compliance. And as a reminder, you have 5 months from the 3rd anniversary of a duty start date or previous re-enrolment date to complete your redeclaration. It is a process that's all done on the pension regulator's website. So I've included a link to this on the handout for you, which will take you to the page that you see in there on screen. There is a support and resource as well. There's a declaration of compliance checklist on the TPR website, and that gives you information about the statistics that you'll need to provide. So everything that you will need when you do your redeclaration of compliance. So have a read through this in advance of your re-enrolment date. There's a few top tips as well from the regulator on there. And then when you're ready to do it, you would start your redeclaration, you'd log into the web portal, you'd provide the information required, and then that's it done until the next time in 3 years' time. So redeclaration, nothing to do in payroll as such. It's all done via the pension regulator. So that's it for the demonstration. But as promised, we do have a short multiple choice quiz to help you check your knowledge on today's webinar. It is completely anonymous, so it's optional for you to join in. We're going to use the polling feature to ask the questions and to gather your answers, and we'll just show the overall responses before I tell you whether you were right or wrong. So we will start off with question 1, which I'm launching on screen now. And this first one for you is, when is your re-enrolment window in relation to your duty start date or previous re-enrolment date? So I've given you 3 choices here. Is the re-enrolment window 3 months before to 3 months after the 3rd anniversary? Is it within 6 weeks after the 3rd anniversary? Or is it within 1 month after that 3rd anniversary? So you can vote for the answer that you think is correct on screen and then click submit. And once we've had most of the votes in, I'll let you know if you were right. Okay, so this one's looking pretty good. Just over 70% of the vote in. So I'm going to close that down now. Let's share your responses first. So we have 96% of replies saying it's 3 months before to 3 months after the 3rd anniversary of your staging date or previous re-enrolment date, with 4% saying it's within a month of the 3rd anniversary. The correct answer there is the first one, 3 months before to 3 months after. So well done to most of you that got that correct. On to question number 2 then. So which of the following employees would not need to be re-enrolled? So is it employees earning below the earnings trigger? Is it employees that opted out or left in the 12 months before the re-enrolment date? Is it employees currently working their notice period? Or is the correct answer all of the above? So which of the following would not need to be re-enrolled? Earning below the earnings trigger, opted out or left in the 12 months prior to the re-enrolment date, or employees currently working their notice period, or all 3, all of the above. Okay, so we've got some good answers in there. Let's close that one down. We'll share the votes. So we've got 12% saying it's employees that opted out or left in the 12 months before re-enrolment, 4% saying it's employees currently working their notice period, 85% are thinking all of the above, and it is the 85% that are correct. So if you're earning below the earnings trigger, you're not eligible, so you're not going to be re-enrolled. If you're opted out within the last 12 months, you don't have to go back in, but you can be put back in by your employer. And if you're currently working a notice period, that's another exclusion reason, so you don't have to go back in. So well done, 85% got that one correct. Question 3. So how long have you got to complete your redeclaration of compliance? So do you have 5 months from the date you chose for re-enrolment? Do you have 5 months from the 3rd anniversary of your duty start date or previous re-enrolment date? Or do you have 6 weeks after completing the re-enrolment? So think back to that timeline. How long have you got to complete the redeclaration of compliance? 5 months from your chosen re-enrolment date, 5 months from the 3rd anniversary of your duty start date or previous re-enrolment date, or is it 6 weeks after completing a re-enrolment? So that one is a little bit closer. Let's have a look at the responses. So the most popular answer there with 67% is 5 months from the 3rd anniversary of the duty start date or previous re-enrolment. Got 19% saying 5 months from the date you chose for re-enrolment, and 15% saying 6 weeks after completing the re-enrolment. And the correct answer is 5 months from the 3rd anniversary. So if you chose a later re-enrolment date towards the end of that window, potentially you've only got a couple of months until the deadline for redeclaration. And the 6 weeks was just to try and trick you. That is the 6-week period that you have to write to your employees to tell them that they've been re-enrolled. So yeah, the 5 months from 3rd anniversary was the correct answer. And last one for you, this one's true or false. So true or false, I have not had to re-enroll any of my staff, so I do not need to complete the redeclaration. Is that statement true, or is that statement false? So read that one carefully. It's a few double negatives. I have not had to re-enroll any of my staff, so I do not need to complete the redeclaration. True or false? And that's looking good so far. Great, so 80% of the vote in. Let's close that down and let you know how you got on. So 100% of you saying that statement is false, and 100% of you are correct. Even if you didn't have to re-enroll any staff, maybe they're already in the scheme or there's no one eligible, you still need to complete the redeclaration of compliance. You need to report the fact that you've complied with this duty to the pensions regulator, and you would do that 5 months, within 5 months of the anniversary of your previous re-enrolment. So well done on the quiz for those of you that got 4 out of 4. And that pretty much brings us to the end of the webinar content. We do still have some time though, so we will continue to answer any final questions that are coming through. Just to let you know, there is plenty of further support available for you. Looking at some upcoming webinars, it was Pensions Month really last month, so we ran a series of pensions webinars. We do have one coming up tomorrow on Pensions Data Exchange if you're interested in learning more about that feature, if you're with Nest, People's Pension or Smart Pensions. For the others, if you missed any of those sessions, we do have recordings available, which you can find on our webinar hub at sage.co.uk/webinars. And we have more sessions running into the rest of July, all around processing your payroll. So do check out what's available following the register link or from our webinar hub. We also have an online help centre at sage.co.uk/help, which can also be accessed from any of the help icons in Sage 50 Payroll. So from there, you can read our knowledge base, you can read the support guides around workplace pensions, the pensions module. You'll find links to our webinars, see other videos, and if you do need to contact our support team for any reason, you can get in touch by selecting the topic you need help with and then clicking the Get in Touch link. As well as that, you have free access to Sage University at sageu.com. So this is a fantastic online learning resource. You can register at sageu.com if you haven't already set up your profile. And then if you follow the links to Sage 50 Payroll, you'll find all of our training and certifications, which you can complete at a time to suit you, all free of charge. So e-learning courses, online certification, and bite-sized learning courses as well can all be found at Sage University at sageu.com. So that's it for the presentation. I will shortly go on to mute just to sort of check if we've got any outstanding questions. So just going to go on to mute briefly just to check if there are outstanding questions. I think most of them have been answered, and then we'll be back to say goodbye when we're ready to close things down. So I'll speak to you shortly. Hello again, everyone, and thank you so much for sending those questions through. Alice has done a sterling job, as always, answering them throughout the webinar. I think we're just getting the last answer to the last question out that just snuck in a minute ago. So I'm going to take this opportunity to thank you all for joining us at the webinar today. I hope you found it useful and you enjoyed the session. But on behalf of myself and Alice, thanks so much again for joining us today. If you're coming along to Pensions Data Exchange tomorrow, we'll see you there. If not, enjoy the rest of your week, and we hope to see you on some other webinars in the not too distant future. Goodbye for now.